Bitcoin's explosive rally has seen its first significant level of resistance and subsequent selling pressure. After reaching a price of nearly $91,000, for the last 24 hours, Bitcoin has mostly consolidated, enjoying its first significant pullback. In this episode, we will analyze the reasons for the current level of resistance, identify likely pullback targets, what to watch for over the next 2 days, and what our next upside price targets are. Let's get cracking. All right, referring to my tweet today, consolidation expected. All right, my original moderate price target posted on November 7th, 2024, called for $87,000 to $91,000 Bitcoin. Let's just go back to the weekly time frame to confirm that. So if you guys will recall, let's just go back here. On November 7th, I posted 3 price targets, a conservative measured move, which would be our first retracement. This corresponds to the 1.382 Fibonacci extension. And then my moderate price target, or a full close measured move. This corresponds to the 1.618. And just so we're very clear about how those price targets are derived, for these current levels right here, we just simply look at the most recent consolidation. So we have the kind of current high before the breakout of this cycle and the current low that we saw on the retracement over the summer doldrums. So we just take a fib extension of those and we get 1.382, which corresponds to our conservative measure move, and the 1.618 to the moderate price target move. Now, zooming out, if we actually go previous cycle high to previous cycle low, we do the same thing. We take that fib extension. We actually get the 1.382 at our current price level, the price that we actually hit our target, where we get the 1.618 at the $102,000 price mark, which is a little bit below my aggressive price target, because my estimation is that if we are able to on this current push crack up all the way to 100,000, then we're likely go a little bit beyond that. All right, I don't expect it to be front run. So, all right. This price target was utilized, or was extrapolated utilizing fib extensions and liquidation levels. All right, liquidation levels is kind of the other unseen aspect of that. All right, simply monitoring liquidation levels on the higher time frames and seeing where they're going. And the reason why, as I say in my post, is because whenever we are in a market situation where we have broken out above previous all-time highs and we're in new all-time high territory, we no longer have any technical analysis, road marks to go by. There's no resistance, Bollinger, all momentum oscillators, technical oscillators, all those things start to be a little less relevant when we're in uncharted territories and we enter into a phase of price discovery. It's just completely unchained price discovery. And so in my experience, the only methods that I've found that hold water, that actually have statistical significance when attempting to find price targets in situations such as these, are the aforementioned Fibonacci extension methodology and liquidation levels. So you basically have magical numbers that we find in nature, all right, and we apply those to the chart, Fibonacci, and liquidation levels. So relying on real market time dynamics and looking at the pain points of actual individual investor cohorts. Now, there are other aspects that you can look at too, and these things apply to, any rally, any market period. For example, later on, we'll look at rising or falling open interest relative to price action, and falling or rising volume relative to price action. And what you will learn with that kind of price action style of trading, and I certainly incorporate it into my trading as well, is that you generally just want to understand how the dynamics work in different market regimes. So the relationship between rising and falling volume relative to price action will have a certain rule set when you are in a bull market. They will have a different rule set when you are in a bear market, and they will have a different rule set when you are in consolidation. So understanding that, as with most things, you have to always optimize your rule set for the current regime, because you're going to see different rules, different statistics play out in different market regimes. So that's an important point to clarify. So let's get back to the bigger picture here. All right. Now, one thing I point out here is another important aspect that I don't want us to forget is that a lot of this, certainly a lot of the buying that we have been seeing, has of course been from bullish individuals going in and hitting the green button. But there's an unmentioned or an often undermentioned aspect of this, which is shorts covering. Of course, there was a lot of short open interest around the previous all-time high, because that's just a good statistical trade to take. Oh, price is at its previous high, short, right? And when price breaks out to the degree that it does, it's going to liquidate traders. It's going to liquidate those short positions or put them into crunch time. So it's either going to put them into financial strain, or it's going to clear out their positions by liquidating them. And when you are liquidated in a short position, or when you cover a short position, say you're not liquidated, you just cover the position voluntarily, that is a buy. That is a compulsory buy. You are forced to buy. You can't, getting out of your short, you can't sell. You already sold to get into the market. You have to buy, which makes price go up. It's the same as a market order or a limit order executing in the order book. So we cannot understate the importance of shorts covering whenever we have an explosive movement or an impulsive movement to the upside. So that's very important to identify. But we've reached a level where almost all short liquidations have been cleared out. There's still a few, but almost all short liquidations have been cleared out. And so the compulsory aspect, the compulsory buying that has helped lead us here so far, that is now gone. All the bears' money has been taken. We flushed that liquidity out of the markets, or we flushed that compulsory buying out of the market so far. Now, we do have a couple catalysts coming up. We have core CPI coming out tomorrow morning. So it is very classic for Bitcoin to de-risk moving into a CPI print. And then usually there's volatility in the immediate 1 or 2 hours prior and after the actual CPI print. And then generally the trend resumes, which previously been consolidation, but now I expect it to be to the upside. Now, the only other thing, and this is very important, is Jerome Powell is scheduled to speak on Thursday afternoon. Now, Jerome Powell's words moves the market, but we cannot not look at the kind of battle that is setting up. All right. Now you have to understand that, again, love him or hate him, Donald Trump and the team that he has around him has a strong element of libertarian end the Fed ideology. And this is an ideology that has never really gained the mainstream spotlight like it currently is, or like it will during a Donald Trump presidency. And as an advocate for abolishing the Federal Reserve myself, somebody who's talked about this for years and years and years in all of my content, going back to my first videos, the power play, or the potential kind of battle between the executive branch of the government and in general the vocal minority, I guess, or the majority now, according to the polls in America, versus the Federal Reserve Bank could heat up. So obviously we saw in Jerome Powell's last public appearance that he was questioned 3 separate times in one interview on whether he would step down if Donald Trump asked him to. And then when he said no, he was asked to clarify, do you think that you're not legally required to step down if Donald Trump asks you? He said no. And then on a further follow-up, he said it is not permitted by law. All right. Now on X, I'm seeing a lot of kind of basically, I'm really only seeing one take, right? So I'm going to argue the other side of it. And the first take is that obviously this is kind of from the end of the Fed, but it's also kind of mixed in with Trump supporters as well. This idea that, well, the executive branch should be fully under the control of the president. And this is just another example of a deep state patsy that needs to fall in line. Okay, all that, which granted might be completely correct in this case. The other side, of course, of that argument is the fact that the Federal Reserve Bank was designed to operate and be independent of power, so that politicians couldn't come in and manipulate the economy to kind of serve their will, because they would all do that. Whereas the stated purpose of the Federal Reserve Bank is to be there to make the best decisions for the long-term interest of the United States economy, for employment and inflation. So I see 2 potential scenarios for the Bitcoin markets come Thursday. And this is speculation, but I feel that, of course, I think that now with another week of Trump announcing his cabinet and making selections and making waves, releasing those videos that he released, I think that it would be ludicrous to think that Jerome Powell is not going to be questioned about this again. And I think kind of one of 2 scenarios could play out. One, again, last time when Jerome Powell spoke, he was the most bullish that I've heard him in a long time. And of course, the markets responded positively. And of course, coinciding with an interest rate cut. And with another interest rate cut scheduled for December, again, we are setting a very bullish macro environment. Now, if Jerome Powell comes out and is just bullish, dodges the questions about Donald Trump, I think all that is extremely positive, and we can resume price discovery with whatever kind of natural resistances or supports that we're going to have in the Bitcoin market. I think pretty much up only. I think the euphoria is far from over. However, if in the time from the last meeting to Thursday, Jerome Powell is, for example, going to be oppositional to Donald Trump, then he could potentially come out as a bit more hawkish than he had seemed in last week's meeting, and has the potential to throw the spanner in the works a little bit by either A, being hawkish, or B, saying things that are a little disruptive, let's say, to a Trump presidency. And I think this has the potential to cause a pretty significant pullback in the traditional markets, as well as with Bitcoin. Of course, Bitcoin is going to follow trend markets. So definitely something to watch for. So in the context of that, all right, I think that Bitcoin is likely going to consolidate for the next couple of days. However, altcoin dominance has continued to rise off of its lows from last week. So I think the next few days are going to be opportunities for you guys to take profits on positions that you feel you're uncomfortable with or overly leveraged. If you've made good gains off of them, it's not a bad idea to take some profits, move your stop losses up to profitable levels. If your positions can't survive a plunge to $80,000 to $82,000, which would be a likely kind of reactionary panic pullback price, then those are positions that you probably need to be reconsidering right now. I cannot emphasize this enough. I'm not talking about spot altcoin positions, the ones that you have confidence in, the ones that you intend to hold for this cycle. We absolutely do not sell at resistance when we're this early on in the euphoria phase and the price discovery phase of the market. And with regards to spot Bitcoin, absolutely not. Just continue to hold, right? This is my official recommendation. We are not in selling mode now yet whatsoever. However, if you guys have jacked up the leverage, and if you also, to the sub audience out there who has largely been sidelined for this pump, and now you're getting to the point where you're just willing to jump in right now at 50x, 20x, 25x leverage, I don't think right now is the best time. I would wait until probably this weekend, after we've got the headwinds of the CPI print and Jerome Powell, as well as PPI comes out on Thursday as well. So we get all of that out of the way, and then I think Bitcoin will be cleared for another takeoff. All right, market dominance. And yeah, Bitcoin continuing to pull back as I speak. All right, market dominance. Bitcoin dominance we see here on the rise after a couple of days of decline. So Bitcoin dominance back up at 60%. This is typically not good for altcoins, but again, 60% is a significant number because that has kind of been that historical level of resistance where Bitcoin gets to about or slightly above or slightly below 60%. And then kind of in the macro, Bitcoin dominance starts to slide down. This is what we've seen in previous cycles while altcoin dominance then begins to rise. And it's kind of altcoin season. So even though altcoin market capitalization is 30% off of its lows, I think that there is significant potential for diversification in altcoins even at this point. So definitely do not want to be sleeping on that. So Bitcoin dominance, again, currently at 60.18%. That's a climb. That's an increase of about 45 basis points. So almost half a percentage there. Ethereum dominance is currently sitting at 13.62%. That's a drop of 1.81%. So again, we're seeing Ethereum and Solana dominance slide off here. Solana dominance at 3.48%. It's a drop of 3%. So some pretty significant drops from Ethereum and Solana dominance as profits have been taken. We see stablecoin dominance rising just a little bit. Altcoin dominance pretty much flat. So it's reached a nice little plateau. So I think Solana and Ethereum profits were pushed into Bitcoin and pushed into stable coins a little bit as individuals are, again, just kind of classically de-risking prior to going into a CPI print in the morning, as well as a Powell speech. So all this seems completely normal. Altcoin dominance is 16.82%, again, pretty much flat from 16.84% yesterday. And stablecoin dominance sitting at 5.89%. That's a slight increase from yesterday's 5.79%. So nothing massive, nothing major. Again, we're seeing that money kind of flow into Bitcoin. I think alt positions are being covered slightly. Ethereum and Solana positions are being covered slightly, and a little bit of risk off into stablecoins. But again, I think most individuals are holding on tight. So, all right, ETF flows. All right. So the 11th yesterday, again, saw one of the record highest total inflow days across spot Bitcoin ETFs. As usual, BlackRock's ByBit was the leader with $756.5 million in inflows, followed by Fidelity's FBTC and ARKB right here. So total inflows for yesterday were $1.114 billion in inflows. Now, it is obviously much too early to say that this could potentially be one of the best weeks ever. But as we can see, if we just go to the daily, this was the second highest daily inflow, with last week's day after the election, November 6th, being the highest recorded inflow yet. All right. So again, and we're already off to a start with just one printed day. We're already at, again, $1.11 billion, and we're already in about the 50th percentile of best weeks ever. So if we can just keep this up, life will be really good. This could be a potentially very good week for BTC. All right, capital rotation. This is coming no surprise. What did we see move up massively? We see the pump fund ecosystem moving up another 41%, up 158.7% on the week. Elon Musk inspired memes are up 37%. They're up 141% this week. AI memes are up 33%, up 123% this week. Dog themed up 24.3%. And for the first time, base memes. All right. So memes on base. Are these memes on base, or are these just like base memes? Yeah, these are all memes on base. I've traded Degen before, Brett. In fact, I think I know I'm still holding Degen, and I think I'm holding Brett. See anything on here? I see. Are some of my coins are the top gainers? All right, let's okay. Categories. What do we see? Clearing the charts. Of course, GOAT doing up well. I am holding GOAT. All right, market cap of about 4 million. I am watching you. Up 121%. Memes AI. These guys have a pretty interesting Twitter. They've got a really high market capitalization and 24-hour volume 26. They're up 100%. Tuki Shogoth Shrub. Shrub is also a crossover with AI memes, I do believe. So pretty good day. Based. Very nice. Up 59.6%. Good times. All right. Leading the Elon Musk inspired memes. We, of course, have Shrub. Oh, yeah, that's right. Shrub was also an Elon Musk. Elon's pet fish, Eric, up 86.8%. Market capitalization of only 1.773 million. So potentially still quite a bit there to go. Elon RWA up another 61%, up almost 5,000% on the week. 24-hour volume, 2 million. Only a $7 million market cap. So again, potential for that to move as well. And then where do we got? Yeah, here's my baby. Department of Government Efficiency, up 275.5% total. We have FDV of $193 million. Not bad. How high can we get? Can we reach $1 billion? I think we can. All right. So capital rotation is good. Overall, we are continuing to see meme coins just continue to lead the charge. So we are not seeing that capital rotation into... of course, we are a little bit, right? Like they are moving up a little bit. We are starting to see a small amounts of money flow into, of course, traditional projects. We talked about yesterday some of this capital rotating into foundational projects like lending and borrowing, bridges, RWA, decentralized exchanges, perpetuals, and futures. So all of that is important, but of course, memes are just still the number one. So, and again, I've given my best advice for memes, which is basically pick 5 that you really like, put a small amount of capital in them and hold. You just got to hold. And, getting rug pulled is just kind of part of the process. But go back. I've got a great video, how to find the next 100x altcoin before it pumps, where I go over all the tools that you guys should be using to make sure to minimize as much as possible your odds of buying something that's fraudulent. All right. So if you can just follow the basic rules and do the basic checks that I recommend for all of your kind of meme coin DEX trade investments, I'm not going to say that you're then going to hit winners. That's up to you. You got to pick the right coins, but it will likely it will likely help you avoid being rug pulled or buying a scam if you know what to look for. Okay. All right. Breaking down Bitcoin. Now, as we pointed out earlier, or maybe I did not point it out earlier, but Bitcoin has, I did point this out earlier yesterday, but Bitcoin has now reached overbought levels on the weekly time frame. Now, this isn't much of a concern because volatility is still so far off of its highs. We're only in the 55th percentile for BBWP volatility on the weekly. So this is totally fine. And we can even notice, like, let's go see here. So here we reach overbought for the first time, and then we still have 4 more weeks of upside here. All right. And even when price, then we have a nice reset over this consolidation period. And then we reach overbought and we still have, well, I mean, we don't even go down directly. We have another month of basically consolidation and upside. So all good. So this in itself does not concern me, just something to note and be aware of. On the daily time frame, we are overbought as well. This is going to be our second day of being in overbought status. And today going to be likely confirming our first high print of critically high volatility. Now, typically we do want to be taking profits and securing positions when we reach levels of high volatility. How do we trade volatility? We enter when volatility is low, we trade in the direction of the break, and we exit when volatility is very high. This is just a classic strategy. So again, this is just kind of adding some strength to my recommendation to be just today, do some housekeeping, right? Make sure that you're locking in positions, that you're locking in profits. I mean, come on, guys, like, going from 72 to 88,000 is an incredible move. I do believe this is the largest move. I saw this earlier. This is the largest move in Bitcoin's history in such a short period of time. Now, I want to draw your attention to the 4-hour time frame on Bitcoin, and I want to point out kind of what we've seen with volatility and why I'm expecting consolidation, not so much a gnarly pullback at this point, but consolidation as we try to establish, the high 80s as our new normal for our to be able to make that next push to 100K. Notice that the last 2 times that we have reached critical high volatility on the 4-hour time frame, we've gone sideways for about 2 to 3 days. All right, here we hit critical volatility on the 4-hour time frame. We go sideways for about 5 days, and here we are hitting critical volatility, and we've gone sideways for about a day so far, well, a little bit more than a day. I'm either expecting a pullback to these levels that we talked about earlier, or I'm expecting this kind of sideways consolidation. But overall, I'm expecting to see some sort of resolution or to have a firmer idea of where we will be going by the time this week is over. Now, let's turn our large orders off and just look. We do have a cluster of liquidations right here. All right. We can see this cluster of liquidations here starting at around 90,000. Then we have another cluster at 90,232. And then 90,691 and ultimately 90,844. So that is basically where the liquidations are. So it's completely fine if you guys want to play reversal plays like short-term scalps up into these levels. But, and listen, I don't want to be the guy that's calling for shorting BTC, but I think that if you want to add some spice into your life, I think over the next couple of days, unless I'm wrong, of course, and we just break out immediately and continue to pump, which we could because of all the momentum. But I think what's much more likely is to see these as potential areas to engage in really high value shorts back into the middle of the range. And I mean, if you really want to bet big against Bitcoin, of course, ultimately down to $85,000 to $80,000. But now another reason that I was feeling that we were going to get some consolidation here is because of the volume and open interest print. So as we can see here, let's just look here at Bitcoin. We can, let's turn the footprint chart off. All right. So here we can see Bitcoin moving up into this last leg of its kind of most explosive rally before we kind of hit the resistance that we're at around, $89,000. And we can see that as price is moving up, we actually start to see volume move down. And we also start to see, most importantly, open interest begin to move down, indicating a lot of positions are closing out. All right. That more positions are closing out than being opened up. Okay. And then we can see Bitcoin consolidate. And as price, we get a little bit of open interest starting here. Okay. We get a little bit of open interest starting here. But again, price moves down, positions are closing out. But this is the important thing. On this most recent kind of push back up to the upside that we just experienced a couple of hours ago, what did we notice? Normally, if we were going to just continue moving to the upside, we would want to see open interest basically remain flat or be increasing along with volume, but we don't see that. On this second move to the upside, we see volume continue to slide down, indicating that we are in consolidation, and we see open interest sliding down as well. This is a contrary signal. This is divergence in open interest relative to price action, and another kind of nail in the coffin. So we do want to see this kind of dynamic reverse itself, and we do want to see, again, in general, prices moving up with rising open interest and rising volume. I did want to share this, of course. Again, not trying to brag or anything, but I'm just excited. I had one of my largest ever futures trades today on ByDFi. This was a big win for me. As you can see, I entered at 73,000 and I closed at 86,422. I've already reached out to ByDFi about their text placement on their social media shares because you get these directly from the platform. It's incorrect. It should be they have mark price. This should say exit price. This should say entry price or mark price or whatever. But yeah, this was great. This was a position that had me normally when I trade with high leverage, there's this kind of feeling of anxiety or nervousness. That's why, kind of my sweet spot is, 5 to 10x leverage. But like I said, and I made this, this is what I posted in our Discord. This is what I posted to my community. This is what I said on this channel. And this is also what I said on Twitter. I said, listen, guys, after Trump won, I had to go with it. This was one of those situations where I had to bet big on what I believed in. And I dropped a lot into Department of Government Efficiency and I dropped a lot into Bitcoin. And I said, let's go. This is going to be it. This is going to happen. This is really happening. And I was completely right. So big win, and shout outs to all of you who also have your own big wins who have been able to capitalize on this so far. Now I'm completely ready to reopen this position either once price dips or once we get a resulting breakout from our consolidation. Again, really for me, the things I'm going to be watching for is not necessarily a breakout or not. I'm watching for the time to enter when nobody else wants to enter. I want to see volatility drop is what I want to see. And then I'll take my position based on the fundamentals that I'm seeing at that point in time. All right, so the TLDR, guys, consider taking profits on overly leveraged positions that wouldn't survive a wick to 80K. Target 90,100 to 90,800 for short entries back into the range, or if you really want to bet big for a pullback to 80K. Do not sell your spot positions in either Bitcoin or altcoins. Instead, use any pullback to DCA into larger positions. We do not sell spot until mid to late 2025 or unless Trump gets assassinated. All right, guys. Now, we do have an exclusive offer. Again, new promotion with ByDFi. The link down in the description. You will be getting now 10% of your deposits over the course of your first week back as cash back trading bonus. This is good up to $1,000. So if you deposit $10,000 to trade, you're going to get an extra free $1,000 trading bonus to trade with. This is good. It's the net deposit over a week from your first deposit. So you sign up for ByDFi, deposit a small amount, see if you like the platform. I guarantee you will. And you then have a week from that first deposit to attempt to max out your deposit limit. So again, the max deposit that you could take advantage of this is $10,000. That way you'd get $1,000 cash back. So the max cash back you can get is $1,000. Also, with the link down in the description, you are going to get a VIP level 1 fee advantaged account. This is distinct from a regular trading account in that you'll automatically have access to 17% off your trading fees on futures. Of course, there's 0% spot trading fees, and it automatically doubles your 24-hour withdrawal limit from 12 to 24 BTC. And then you also will have access to all of our community's events. All right, so click that link down in the description. It's a long one because we have added a new link today so that you automatically get that VIP level 1 discount. And we are going to be having a trading competition coming up over the next couple of weeks exclusively for those who have signed up with our link to ByDFi, where there will be cash prizes, fee rebates, all of the great stuff, leaderboards. So come check your skills, go enjoy a great exchange over at ByDFi, and you will support this channel. And thank you very much. All right, now that's about all I've got. Again, the TLDR, guys, this is a good time to reevaluate positions, begin taking initial profits off the table, moving up those stop losses, and kind of getting your game plan for the next move. You need to be prepared for a pullback. You need to be prepared for consolidation, and you also need to be prepared for a breakout. So again, the conviction stays firm, guys. Spot positions just continue to add. This market is going to do such great things in 2025 and even beyond. Very high potential that we hit 100K Bitcoin before the end of 2024 with the momentum that we're currently building. So the only things that we need to be a little cautious about over the next couple of days is the CPI print coming out tomorrow morning, and I actually expect it to be bad. I actually do expect the CPI print to be bad tomorrow morning. We'll talk about that tomorrow after I'm justified or vindicated. And Jerome Powell speaking on Thursday. All right, so I've already laid out the strategies, how to get around that. And yeah, All right, guys. Make sure, obviously, shameless plugs coming up here, guys. If you've gotten value from this content, make sure to smash that like button and subscribe. Share this content on your social media. I will follow you. I will repost what you repost. So I really appreciate that. I want to grow this community back to the greatness that it was, and I can only get there with your guys' help. So if you have suggestions for what kind of content you would like to see, if you would like me to cover slightly different things on a daily basis, would you like more altcoins, this or that? I need to know what you guys want to see and how I can grow this channel. So I can only do it with your help. So please like and subscribe. It really helps out a ton, more than you could possibly imagine. We are going to begin posting content on Rumble as well. So look forward to that. And then make sure you guys join our free Discord, discord.krakencryptocurrency.com. You can get access to our free signals, get access to Shearus and Reflex's great analysis and free signals. And if you were serious about becoming a trader, whether you want to do it as a hobby or as a professional, sign up for our crypto trading academy at krakencryptocurrency.com and learn to build your own strategy, system strategy from the ground up. No magic, no voodoo. It is going to be harder and more difficult than the other courses that are out there, but I guarantee you it'll work better than anything you've tried. All right, ladies and gentlemen, I will be back tomorrow. And until then, trade safely and stay frosty.